Hi, and welcome again to another edition of Market Analysis. For today, September 24th of 2025, I'm Gio Benacord, your host. Let me get started with the disclaimer. The information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes as they do not constitute investment advice and or consultation on how clients should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right. Your host, Gio Betancourt, Senior Market Analyst, Market Educator, and Administrator of Strategies with Vantage. The agenda for today, we're going to be looking at the economic calendar, what's moving in the market, identifying key level support and resistance levels, and trading with Fibonacci tools. About Vantage, our ecosystem offers over 1,000 instruments, over 100 chart patterns, and over 100 technical indicator tools. We offer CFDs on Forex, indices, shares, commodities, and cryptocurrencies. What we stand for, lightning fast execution, award-winning 24-hour support into the tools and global connectivity, along with strict regulation. I like to begin by identifying clear, consistent trading habits as something we must have built along the way. Be comfortable with the prospect of losing money if the market goes against you, and emphasize risk management. When are you using your percentage-wise, 1% risk, 2% risk. Also, volatility can spike and spreads can widen, so reducing leverage is recommended, and it's highly recommended to use a stop loss. In your trading plan, you want to be also having things like identifying trends, timing the entry at exit points, risk management, and confirmation validation. All right, I think it's important that we have a shared common vocabulary for what is technical analysis. So let's dive right in there. It's just a form of data visualization, obviously charts, charting, displaying market data in lots of different data visualization modes. It's a big part of where technical analysis came from, but you do gotta go back a couple of hundred years to the rice pits of Osaka, Japan, for a gentleman named Munohisa Homa, who invented the Japanese candlesticks as a way to try to capture all of the behavior of traders in those rice pits. We, of course, advanced the discipline over hundreds of years, and there's lots of different chart types. But I'm going to argue to you now is that technical analysis is far more than just collecting data and displaying it in a way that we can interpret a lot of information quickly. That is part of it, but if you look at definitions from some of the very early texts from the 1920s, 1930s, then it says that it is the study of the market itself. All of that price action, all of the investor behavior, everything that is happening in an open, freely traded market is part of our discipline. And I love that definition because it is quite broad, and hopefully through today's session, you'll understand just how broad and the depth of study that you'll go through. We also know that technical analysis is a study of that supply and demand relationship, that we care a lot about the behavior and the psychology of investors, and is one of the hardest things to quantify when you're thinking about investment decisions. I'll argue that it's overrepresented in this beautiful little element called price, which we can call it also a systematic evaluation. And systems, the reason I bring this quote is that a lot of us have heard about algorithmic trading, high frequency. You might be an advanced programmer, you might know Python or R or many other languages, and that is an important way to express some of the ideas. But even if you're not a coder, you're not an algo trader, you should be thinking in terms of systems, a rules-based, repeatable approach. And that's something that was drilled into me as I spent surrounded by some of the best money managers in the business, is that they have a defined, repeatable process or a system that they follow no matter what the market is doing. Alrighty, a quick refresher from your Economy 101 class. Remember that at a fixed rate of supply, an increase in demand is going to move us up the price equilibrium, or a decrease in demand will move price down the equilibrium. So when we're thinking about an open, freely traded market, demand, greed of investors is inherently pushing prices up, and fear or selling pressure is going to push price down because it's a fixed supply. And I want you to hold that thought in your mind because it is perhaps one of the most important parts of the magic that we're trying to unlock here, or the message of the market that we're trying to decode, which is related to learning that if you take emotion, the would be, the would, it should be, the could be, out of your decision making, and if you look at what is just happening and you can quantify that, you have a big advantage over most human beings. Now, I'll argue for all of us in investment discipline, there's a lot of emotion tied to those trading decisions that we make each and every day, and those emotional impacts on our decision making can be very negative. So, the more you can remove your emotional and cognitive bias from your decision making, the better chance you have of staying on the right side of trends. Alrighty, so I'm gonna stop sharing my screen for a second here so I can share my charts. Okay, so let's see, you should be seeing my charts now. Let me see. You should be seeing my charts at this moment. Okay. Okay, hold on for a second. All right. So in front of us we have the candlestick chart. I'm gonna start looking for our levels of possible support and resistance for today. As long as we are able to populate the chart. All right. So in this chart, we see how the market had made a double top right up above the 25,000 milestones. So I'm going to speculate that we're going to come in and do a third double top today. So that's why that will be a resistance level. And 24,300, 700 ish is a first level of support. Now, given the reasoning of this, let's just kind of figure out let's add the high 25 or 25.25 plus the low 24,780.15 plus the close 24,832.15 equals divided by 3, and we get 24,879. That's gonna be the pivot point for today. So let's see, around that area we'll see some fluctuation. Let's take a look at, oh wait a minute, I need to do something here. I'm going to change the colors of my lines, implying that our this is resistance, will be selling levels around that area, and then green being a reversal, so buying on those lows. Let's see, I'm going to change this one as well. All right, so here we have the S&P also making that double top on the actually use Monday's range. So we have that double top. We have as a level of resistance, and Monday swing low as possible level of support. So just pushing higher. Let's see that be the case. Now we have here the Dow. All right. So yesterday we did had a pretty wild swing on the Dow above 47,000, hitting that marker and then just dropping and closing below that. So I'm gonna assume today we're gonna have this fluctuation. I'm gonna make this tight range today for the asset. So let's see if we'll have another spike. I think everything's gonna be quiet until Friday, which we receive it tomorrow. So we have some good news. So let's see what will happen. Crude oil 64.51 is our level of resistance, and I'm gonna use $63 flat as support We do have a pretty strong fluctuation to the upside on crude oil. So let's see, and we do have a supply uh, issue with crude oil. So let's see. I'm looking to go long the asset, looking to buy crude oil. Then we have nat gas here. I'm gonna lower my levels to 2.880. That's my level of resistance, and 280 as my level of support. Looking to go long also the asset. Then we have here gold. 3,800 is the psychological level for gold. So that's where we're gonna place our level of resistance. And we're gonna be using yesterday's swing low as a possible level of support and market rallying to the upside, looking to hit our target of 3,800, and from there correcting, pulling back. Okay, now we're looking at silver. So we're gonna use yesterday's swing high, possible level of resistance. And so far today, we actually come and met yesterday's low. So I'm actually going to use 45, looking to go long the market. Now we have copper. Pretty wild swing today on copper. So we have a pretty wide range, but going with the trend to the upside. Bitcoin. We have Bitcoin, and things are just not working so far so good. Looking to be long Bitcoin. I apologize. I'm not gonna be able to do this today.